Hello students, welcome to today's session on the topic accounting standards. So accounting standards, this is nothing but the globally accepted standards. Okay, so how the recording, how the bifurcation of the all transactions is done. So this is part of the accounting standards. All right, so the first one, the introduction of accounting standards. So in India, ICAI, that is Institute of Charter Accountants of India. Okay, so the authority is given to the ICAI to design, to draft, to maintain, to monitor the accounting standards. So accounting standards are written guidelines issued by accounting bodies. As I mentioned, in India, it is ICAI, or for uniform and consistent financial reporting. So it is nothing but a constitution, I would say, kind of constitutions for the accounting. Okay. So based upon this, every company, every firm, every business must be follow this accounting standard in India. Okay. Now talking about the purpose, definitely, as I mentioned, it is a kind of constitutions. So it bring uniformity. That means Mr. A having a one firm, Mr. B having another firm. So there should not be any differences in the books of accounts or types of accounting, right? So there should be a standard across the business, across the company, okay, across the industry. So the purpose is to bring uniformity. The second one is comparability. Comparability is nothing but if we have to suppose compare apple with mango, it will be difficult to compare. But here, if we are having the standard apple with apple, right, mango with mango, then we can compare whether it is sweet, whether it is green, whether it is having different colors, right? So the comparability is nothing but based upon the accounting standards, books of account is prepared, and then we can compare company A's account with company B's account. Okay. And the next one is transparency in financial statement. It is always most important aspect of transparency, because suppose if one of the business is not following the accounting standards, right, they could hide something, they could deliberately not disclosing anything. So it's better to have the accounting standards, right, followed, and it will definitely come into the transparency. Now moving to the importance. So importance is it helps of accounting informations, like as I mentioned previously. So different stakeholders, it could be investors, it could be banks, it could be governments, it could be debtors or creditors. So they can easily analyze the informations based upon the accounting or the books of accounts. Okay, so this is the relevance in class 12, basics of preparing financial statements and understanding accounting principles. Okay, though this one is very basic one, but yeah, I'm gonna cover based upon this. Now coming to the objective, right? So what is the objective and the benefits? So objective, it is pretty clear: ensure consistency in the accounting policies, right? So if it is not consistent, if it is not uniform, if it is not standard, it would be difficult to plan accordingly, or maybe compare with one business to another. The second one is provide clear disclosure of accounting methods. Okay, so as I mentioned, the standard, it is nothing but the guidelines, principles, or I would say the constitutions through which accounting books of accounting is prepared. So it provides clear disclosure of accounting methods, which method has been used. So talking about the goodwill, there are different kind of methods to use, right? Written down method, something like that. Okay, so if it is used, so for the consistency, next year it should not be changed, right, without prior information or something like that. So it is clear disclosure of accounting methods, which method has been used. Okay. The next objective is to promote comparability between financial statement of different entities, right? It is very much important. So if we are gonna compare in one of the industry like IT industry, there are so many companies, right? For an example, if you're talking about TCS, if you're talking about Infosys, if you're talking about any other company, right? Accenture, BNY Mellon, anything. So we can compare, right, with the help of their financial statements, which company is performing well, right? So if the accounting standard is not followed, it would be very, very difficult to compare, I mean, each other. All right. Moving to the next piece, that is benefit. So what kind of benefit with the help of accepting this accounting standard? So the first one is reduces confusion due to varied accounting practices, right? If it is not uniform, if it is not having the standard, it will be very difficult and it will create confusion, right? Which method has been used, right? The second one is facilitates easy analysis and comparison, correct? So it is nothing but for the analysis process per se, for comparison per se, it is very easy and through which anyone can easily understand the financial health of the company. The last but not least, that is enhances reliability and credibility of the financial information, right? So if any of the company which is not following nowadays accounting standards, definitely the credibility will go down. Company will not reliable, even though they are performing well, but just because of they are having different mode of accounting or having different disclosure, people might think about or that company is not reliable. Okay, so definitely accounting standard must be followed. Now moving to the next, that is the examples of important accounting standards, right? So there are some sort of examples I have jotted down here. So under accounting standard 1, what is depicts? This is nothing but the disclosure of accounting policies, right? So what company has the accounting policy that must be disclosed, right? Here they can disclose what is their financial year, when they are thinking about that, maybe related to the goodwill, how it is, whether it is following written down value method or some other method. So this is nothing but the disclosure of accounting principle, which comes under AS1. AS is nothing but accounting standard. Now we're going to the second one, that is the accounting standard 2, that is valuation of inventories, right? So on which basis they are going to evaluate the inventories, right? It could be based upon book value, it could be based upon the market price, so it should be clearly mentioned on that, right? Third one is accounting standard 3, that is the cash flow statement. So cash flow statement is nothing but the showing the how the cash inflow or outflow going for the specific company or for the specific business, for the specific firm. Okay. The next one is the AS9, that is the revenue recognition, right? So what is the method through which they are recording this revenue? Most important, that is AS10, that is the accounting for fixed assets, right? How it is recorded in the system. Could be related to the big book value or based upon the market value, or how the treatment of the depreciation here, something like that. AS12, that is accounting for government grants, right? Maybe it is not applicable for our businesses, but yeah, this comes under AS12. Next one is accounting standard 17, that segment, nothing but for the reporting per se, how the reporting looks like, what is the format, how it will be recorded on that, right? So in short, each standard provides a specific rule to handle particular accounting aspects and financial statement preparation. Okay, so there are different accounting standards, and it must be followed by the businesses in India. Okay, and just to summarize it, accounting standards is very much important for maintaining the books account, and the benefit per se, it is very, very beneficial for the analysis, for the transparency, okay, and also useful for the stakeholders. So that's all for today's session. I hope you all understand the topic. Keep practicing, and I'll see you in the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.